Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm your guest, John Preston, and with me, as always, is your hosts, Tom and Mark.
Solid welcome. I'm taking it.
I'll take it. Yeah.
Man, good to see you again. Back-to-back days recording.
Dude, I went to the gym yesterday and I had
Humble brag.
and I had a Straight Up Chicago shirt on. And where I go, the gym I go to, he's basically a trainer, but he also coaches wrestling for one of the Catholic schools out here in Lombard, Montini, I think. And they have kids that come in there, they train in the morning. And the one kid said, "Hey, I listened to that episode, that podcast too," but he didn't know it was me. So a kid's 16 or 17 years old, listening to our podcast, wants to be a real estate investor. So that's awesome.
Did you be like, dude, that was me?
I wish I would have came back and said, "Yeah, no, I listened to two," and so I could keep you information. I was like, "Which episode do you like?" Like after I admitted way too fast, no, that's me. I wish I would have vetted for some more information. So
Yeah. Man, see, we got some reach.
we do. Yeah, no, that we were talking about in this episode here as well too about getting out and networking. I had a gentleman reach out to me. He's a soccer player at Northwestern, but he just wants to get involved in real estate. He reached out to us through the website straightupchicagoinvestor.com. And I ended up connecting him with Mike Lasser, and he went to Rogers Park Builder event. He's actually volunteering, doing a whole bunch of work for the summer soiree. So he's a sophomore in college, and he's getting involved. He's volunteering. He's got time, and he's getting connected with all these big people. So
Man, and this is going to air in June, so it's probably time for us to start talking about the soiree.
Yes.
We'll see you guys there that first Thursday in August.
I am looking forward to it. So that's always a great. I believe it's in the same location it was last year, which I was very excited
Off
about.
of Ravenswood, or
Is that?
yeah, somewhere over there.
Yeah, that was a great location. That was the best location we've ever had. I like the courtyard at Loyola. That is probably the best. Or the patio that they had over there right on the lake. I guess that is even cooler. But size-wise, that they've obviously outgrown that.
Yep. All right. Good stuff, man. Our guest today just did so much. We cover so much in this episode. And again, it just comes down to hustling and believing in yourself. And you just got to outlast the troubles. Like, you just got to outrun them, or like they will go away at some point if you can just not take the detour and give up. Like, if you just keep going, you will outrun the troubles, right? Like,
We talked about a couple different ways today. Reps, just putting the reps in. And if you put the reps in, your chances of success for anything you do is going to go up significantly.
yeah. So, all right, let's do our housing provider tip and let's jump in.
All right, so our housing provider tip of the week is in Chicago. You have all these buildings that are built before 1960, and they have, oh man, start over. I messed that up. Catch basin. I forgot the word catch. All right, you cool? Nice. All right, our housing provider tip of the week. In Chicago, we have all of this housing stock built before 1960, and they all have catch basins, whether it be in the basement or in the backyard. And a lot of people I talk to don't even realize they have them, let alone realize that they should have some sort of maintenance plan, that maybe they're cleaning it out every year, every 2 years. But that catch basin, the whole goal of it is to get grease or different things that make it through your plumbing system, and that catch basin catches it prior to hitting the city sewer system. So if you're not maintaining that, you could run into bigger issues where things are going to back up into your building, or you're just going to have bigger problems. So having annual pumping it out annually every other year, just have some sort of maintenance plan in there. And if you have one of the older catch basins, they're actually built out with brick into the ground, and those can collapse sometimes too. So you want to make sure the walls of that are protected, and maybe you have to do some work on that as well too. So 120, 130-year-old buildings we have now, things are going to fail, but make sure you at least know that you have these type of systems on your property that you should be taking care of.
Yep. All right, it's good stuff. Our guest today, been hustling in Chicago for over about 7 years now. I've known him for the past 3 or 4 years. Got to know him just from, I think, taking calls on buildings and so forth. And since then, been someone I trust on the north and northwest side. So without further ado, John Preston from Horvath and Tremblay. Welcome to the Underground.
Thank you. Thank you for having me. Doing great, man. Good to be here with you both.
Yeah. So for our listeners who don't know, we've known each other, I don't know, it's got to be like 3 or 4 years.
Yeah.
And you've been, I've just admired, you have been hustling from day one that I've met you. So excited to have you finally down here. Let's just start. Like, I know you're from Indy. What brought you to Chicago, and how did you get into the game?
Yeah, so grew up in Indianapolis. Was growing up, my mom was a realtor. So I was always kind of exposed to the realtor agent lifestyle that I thought was pretty cool. And, I went to Indiana. I was a business major, finance degree. Quickly learned that I didn't really want to get into the the financial accounting, side of things, and really took more of a sales route after school. I graduated in 2019. So did a quick sales job out in Southern California that like 3 months in, company dissolved, didn't work out. I was like, all right, I'm gonna come back. So I had always been in Indianapolis, loved Chicago, obviously Big Ten. Tons of my friends are from up around here. It's close enough to home, far enough away from home, you know what I mean? And so I came here basically fall of 2019 and started up at my brokerage, Horvath and Tremblay. They had just come to Chicago really like January of that year. And then been at it ever since, trying to
Where,
find and sell apartment buildings.
where are they out of? What's their origin?
So they actually started out on the East Coast, I think like Boston. They left another shop and started Horvath and Tremblay probably 10 years ago. So at that point, they were maybe a couple years into the offices out on the East Coast. But since it expanded, and I think now we've got like 15 offices between East Coast, a few down in Florida. Here, we just opened up a Milwaukee office, an Oak Brook office actually as well. But yeah, all sales, apartment buildings. And then Bob Horvath, Todd Tremblay, they sell like single tenant net lease stuff. So, larger commercial assets throughout the country.
Yep. All right. Looking back on it, did you actually understand what you were getting into? Or you're just like, oh, this would be great. Like, I'll just make a few calls and close a bunch of deals?
Yeah, no, did not. Going into it, you see it and you're like, investment sales. Like, all right, that sounds cool. You know what I mean? And what I was intrigued by was, all right, you're getting into it. It's a, 100% commission job. And the fact that, how much money you make is a product of how hard you work. I was like, all right, that was my first intrigue to it. Sign me up for that. But yeah, then it quickly smacks you in the face of, the work that it takes, what you have to do, how long it takes to, grow a sustainable brokerage business. But, it's got its ups and downs, but it's fun. You know what I mean?
Yep. All right. So for our listeners who don't know and don't understand, because a lot of brokers listeners sitting here nodding their head going and laughing, going, oh, yeah. But what does that first 6 months look like?
It's a grind. So like at our shop specifically, and I know a lot of other places too, you'll go through a couple months of training where you're essentially learning how does a real estate transaction work. A lot of what we do is you're making calls. I mean, especially at the beginning, and even now I'm still ripping 150, 200 cold calls a week.
Ripping coldies?
Ripping coldies.
Yeah, there you go. But a lot of that is, all right, how can I make the cold call to just get a meeting with somebody? Because at that point, especially the owners on the north side of the city, they're getting tons of calls every week, 5, 10 calls a week from different agents and whatnot. But how can I just get a meeting with this person? Because then it's much more so, hey, this is John, the real estate broker, as opposed to another broker calling you over the phone. So that's what a lot of it is. So you go through a couple months training, and then you hit the phones, and you've got a specific market, specific product type that you're focusing on. And a lot of it on the front end too is, as brokers, a lot of, our value is in the information that we have and things like that. So making sure you've got a good foundation for it, making sure you have every single product or every single building that's in your database, the owner, the correct information, so that you're at least giving yourself a fair shot to gain market share, to get in touch with the right people. So first 6 months, especially once you do start calling, there's definitely a learning curve with that too, because, can't tell me how many times, you get hung up on, somebody says, don't call me again. You know what I mean? But, you just kind of got to get the reps in and really try and start to grow that as well.
Yep. When you said you got a neighborhood and an asset class, was that your choice, or was it like, hey, we need a guy to do this, sit down, here you go?
So when I joined, it was pretty open. And again, I'm pretty, naive coming out of school, just like, what's the best for me? How do I make money? You know what I mean?
Now, this is like during COVID too, right?
2019, so right before.
All right, so we're still not in the 2020.
Yeah, and so, I started, I'm like, well, what do you think? And it's like, well, it's pretty wide open. And that's me talking to my manager of like, well, what do you think? And I don't know, apartments seemed more familiar. Seemed like something I could understand as opposed to the commercial, the retail side of it. And so that's what I went with. But at that time it was pretty raw. So it was like, hey, here you go. And I really started up in like Albany Park, Lincoln Square, kind of Rogers Park area. And then as that goes on, deals kind of take you to different neighborhoods. So it's kind of expanded into more of just kind of far northwest side is what I've gotten into.
When you started, were you calling on 2 units, 4 units, 18 units? Like, or was it just, did it matter what day it was?
It didn't matter for the most part. I mean, it was, for the most part, it's probably like 5 to 30 unit buildings. That's still really what I focus on. I have gotten into and have done, honestly, a ton of the 2 to 4 units as well, just because, again, there's still good deal sizes, especially in some of those neighborhoods. But for those, you've got to kind of put a little bit more of your realtor hat on trying, definitely for the pricing. But, the different buyer, you've got to do the showings for those. Sometimes it's a little bit more weekends as opposed to during the days and whatnot. But for the most part, it was targeting kind of like the 5 to 30 unit buildings, and just calling those people, trying to get meetings and help out however I can based on whatever their situation is.
Yeah. Looking back at it, would you still have gone this route? Or would you be like, oh man, I missed the boom over here or this, that, like, do you still feel like you put yourself in a good situation? You're just guessing. Sorry. There's no.
Yeah, no, I think so. I mean, there's things, yeah, obviously hindsight's 2020 where you look at it and you're like, okay, this would have been a good area to focus on. Or, if I knew, where rents have gone, as I'm sure you guys will know over the last 3-4 years, okay, things, you price stuff differently. Things are a lot different. But the biggest thing for it is just starting, you know what I mean? And you get in touch with these people, you kind of grow with your clients too, and they take you, all of a sudden the person that now just had one building now has 6 buildings and whatnot. And so, yeah, the biggest thing for me, I think, was just starting, and that's what I did. And then you kind of expand from there.
What I always like to take the temperature of conversations, because you guys are the ones calling, having these impromptu conversations. Impromptu conversations spur impromptu thoughts by landlords. Like, what were the conversations or thoughts landlords were having in, call it pre-COVID when you first started versus like today when you pick up the phone and call people up?
Yeah, well, so like when I started calling, it was like right around the holidays, December of 2019. So really it was like January is when you really, because holidays kind of a little bit slower. A lot of people are busy and whatnot. At that point, I mean, things were pretty good. Prices were in a good position. And then very quickly it turned into, hold on, like with everything with COVID, that was very much a pause. I don't know. We had multiple meetings where people were freaking out. They're scared. They don't know what to do. Some of those neighborhoods, they're like, a lot of my tenants work at restaurants or whatever. So they're not, their jobs they're not allowed to work and whatnot. So it was kind of a scary time in some of that respect. Also for a newer agent, like I said at the beginning, like the whole purpose of the call is to just get a meeting. And that wasn't a time where people were like, yeah, let's get together. We'll meet you at the building. And they're like, no, I don't want to talk to anybody that I'm not around. So that was where a lot of that had come from. But especially now, I mean, things feel a lot normal now. I mean, a couple years ago, everything we do is pretty interest rate sensitive. And there was a lot of, hey, rates are high, I'm waiting for them to come down. I think, and now the last couple of days have been kind of crazy. But now a lot of it seems like over the last 18 months, people have been much more accepting of where rates are and, trying to do business. And obviously the rent growth that we've gotten over the last few years has helped that conversation quite a bit. But it still goes back to a lot of, the conversations I'm having are like, how can I add value? So for instance, if I sell something, I sold a couple mixed use buildings up in Rogers Park recently. Like I'm calling mixed use buildings in Rogers Park because that's a relevant piece of information for those owners to have. They're trying to figure out how I can just add value into their business plan, their specific building, and just understanding kind of what their actual plan is a lot of what I circle the conversations around.
Yeah. Talking to brokers like yourself, I do feel velocity is definitely up from where it was a year ago, 2 years ago.
Yeah.
I think rents have caught up to that pricing that some sellers want.
Yeah.
They throw out a number like, all right, we finally got there. It took 2 years.
Yeah.
And I think buyers are also coming off the sidelines. A lot of guys stayed in the game, but I think more people are coming off saying, all right, this is the new environment. Like,
yeah,
let's get used to it.
Yeah, it's much more so this is what it is. Okay, let's go.
We've gone through a tax reassessment. Like a lot of those variables have uncovered. Whether they're good or bad,
100%.
at least they're known.
Yeah, exactly. Because the uncertainty is kind of what makes people draw to the sidelines. And so when that's the case, they're going to hang tight. They're going to wait. They're not going to do anything. And that's where it can be challenging. So when there is a much more predictable environment with, taxes, whatever it may be, that allows people to, make decisions with a little bit more certainty. which drives activity.
I always feel whenever there's an interest rate adjustment, there's always that 18 months between the seller and buyer expectations kind of actually lining up where they are. And that's a horrible 18 months for the broker trying to justify why you should do something now.
Yeah, definitely. That can be very hard. And I think what you said about it kind of catching up on some of those neighborhoods and different assets of, okay, here's where the seller's expectation is versus here's where a buyer can actually be on it. I think, like when interest rates were very low, that was a fruitful time. Me personally, it was still kind of beginning of my career too. So you just don't have as many of the relationships and, the pipeline that in terms of deals that you're working on. But so getting out of that, and then interest rates kind of shot up. But 1 year ago, you told me I could get $300,000 a unit for my apartment building. Now the rate's 7%. Again, it's come down obviously, but that was a pretty big gap. So it feels good to see a little bit more balance with that. And again, it always depends on the asset too. Like I talked about some of the mixed use stuff. A lot of apartment owners, they steer away from the mixed use, but there is yield in the mixed use. If you get a good commercial tenant, that pays. It's something where, they're in there for a while. It's not something you have to turn over every unit or every year if you've got a good lease, a good tenant. There's opportunities there too.
Yep. All right. Going back to the first year, can you give us either like the first deal or one of those early deals that was like, oh God, this took 5 years off my life?
Probably the first one, man. It took me, just to give some perspective, and honestly, based on everybody in my office, I'm one of the longer ones, but it took me 18 months to close a deal.
Yeah.
From the time that I started making calls.
Was there a point like at month 12 where like, F it, like I'm going to go get my MBA or whatever?
Oh yeah. Yeah. There's plenty of times where you're like, oh my gosh, what am I doing? You know what I mean? Because even like Bob Horvath, he's talked, he comes out and it's like, it's very true. Like first year, terrible. Second year is when you start to see things pick up a little bit. And third year is when things get hopefully a little bit more consistent. So like the first 3 years are very challenging. And there's a lot of people who do it and don't make it because it is challenging. And so, yeah, going through first 18 months, obviously my parents were, very supportive on all of it and whatnot. But even you get to the point where they're like, still haven't made any money? you're like, gosh, what am I doing,
Not only that, but like you're working like whatever 68-hour weeks to not make money. Like it's not just like when you're hanging out and like it's the worst of both worlds.
No, exactly. And yeah, you're like all your friends. Especially coming out of school, first couple of years, other people they got jobs, they're making money. So like let's go. Before that, nobody was making money. So then you do that, and you're like, all right. But yeah, like early on, I'll still try and go do things. But like, oh, let's go to dinner and go out. I'll just like eat before. And then I'll just go and I'm like, no, I'm not eating. I'm just here though. You know what I mean? So that there is a lot of like sacrifice that comes with that. But, it's a hard business to like expect that you're going to come in and from day one, just jump on it. You know what I mean? Like you get it's $1 million assets for the most part. There's a lot of timing with it with these owners, but for the most part, you're not just going to give that business to the person that just called them out of nowhere. There's jump balls where they're letting a bunch of people work it or you're trying to bring a buyer to it. But for the most part, it takes time to build that relationship so that you can be the person that gets the call. And that's how I've tried to shape it is, hey, there's nothing I'm going to say right now that's going to convince you to sell your building. You've got to come to that conclusion on your own. I'll provide information. I'll give you my opinion if you need it in terms of timing and what it looks like. But just to be an advisor until that time comes when and hopefully I'm the one that gets that call. But to answer on your question of like specific ones. So the first deal I did, it was a 25 unit apartment building up in Rogers Park off of Sheridan Road. And this kind of gives you some perspective. It was, she lived up in like the suburbs, but it was when some of the like riots were going on. Somebody like threw a fire extinguisher through her front window. And that was what freaked her out. Her family's like, you need to sell this building. She was kind of a one-off owner. She didn't have a bunch of assets. It was just this, and I think she had sold one other one. And so that kind of, like I called her, obviously not knowing that, but that was what kind of said, okay, I think I need to seriously take a look at selling this. So we went through everything, priced it, went through all of it, and, we got, I think, maybe a 5-month listing agreement. 25 unit apartment building in Rogers Park. People will come see it. It was listed at like 120 a unit, something like that. small ones and studios. But then 5 months go by. I mean, I showed it probably 40 times and I didn't sell it, like, so you're like, oh man. But she still said she was open to an offer. So 2 more months go by. And then we finally got somebody to come and take a look at it. And the deal, even at that point, was, there was one time where he was like, all right, John, I'm not going to do the deal. And I tried everything. I was like, all right, kill it. We're done here. And then he called me the next day and he's like, this is when rates were at 3. Like, my banker said I can't pass up this rate. Let's go ahead and do it. And I was like, all right, cool. You know what I mean?
Buy that banker a nice bottle of booze.
Yeah, right. So that was the very first one. But it was just, I mean, you learn a lot too through that. But that one was a whirlwind in terms of just getting it, listing it, losing it dying, and then it finally closes.
Well, let me ask this. How would you have handled the exact same opportunity listing today? Like, what would you have done differently today?
Probably better at my job now than I was then, for sure.
Would it have been a pricing thing? Would it have been you have a larger list to promote it to? Like,
yeah, all the above. So I mean, the pricing was fine, honestly. I think the connections that I have and people who I know, and just like how to sell deals. You know what I mean? First off, like, these were vintage studios and ones in East Rogers Park. They were not top of the line finishes by any means. But when you start off, you don't want to say anything bad about it. So like, people are like, how does it look? You're like, they're great. You know what I mean? Like, the units are awesome. But then they come see it and they're like, you know what I mean? So now, again, there's a way to say that without, speaking negatively about the building or anything. But, I think painting a clearer picture of it as opposed to like, oh, the units are great. You know what I mean?
when somebody uses the word vintage, though, that's very subjective. That goes all from like, I don't want to tell you this place is shitty to, man, this place is a gem. Like that you can't touch it because it's so historical. Like there's a wide range of people using that word.
Yeah, you're exactly right. There's times you get a little more specific with that.
Yeah, vintage charm. It's like, that just means this was around during the Depression.
Yeah,
like.
you haven't fucking rehabbed it yet.
well, but it's also funny too. And sometimes you talk to owners, and these people have owned it forever, and they're like, yeah, like, oh, they're all updated, kitchens and baths, whatnot. And so in your head, you're like, okay, great.
The
And
90s.
you go see it, and you're like, when did you do this? He's like, 2003, and you're like, over 20 years ago. You know what I mean?
Yeah, so we had someone say that, and there was like a cast iron sink. I was like, they stopped making those a long time ago.
Yeah.
Yeah.
The roof's new. I did 2007. You're like, 20-year-old roof.
Yeah.
You know, I'm glad I asked, because otherwise I'd be saying new roof, and that's what can cause problems.
Yep. Let's, because we have listeners who probably, I've seen this in the marketplace. I defend brokers all the time. Oh man, like they're making whatever percent, and that's tens of thousands of dollars. And it's like, all they did was show this place. Like, walk us through just getting a listing, right? Like, and I know it's different every time, but like the amount of calls it takes to get the meeting, the amount of meetings that actually turn into something. And once it happens, like the amount of showings, like just the amount of effort to get something from phone call to finish line. If you can just kind of paint that in very broad strokes.
Yeah, for sure. So for every closing, I mean, there are much, much more things that worked on that like fell apart. So to kind of give an idea of some of the metrics of, that we target of like, all right, if you're trying to do 250 calls a week, that should hopefully 50 calls, you should be able to get one meeting. And so if you make 250, you got 5 meetings. If you go on 5 meetings, you should be able to get 4, BOVs from those. And out of maybe every 4 BOVs you do, you're going to win, and you're going to
And for our listeners,
broker opinion of value. So a proposal analysis, basically telling a owner how much their property is worth and how we would go about selling it, that whole process.
Yeah, for our investors, it's basically like the OM, but geared towards the owner. Like, hey, this is how we would go to market, how we blah, blah, and here's our credentials.
Correct. Yeah. All of the justification for pricing, here's what we're listing at. Here's, where we think offers are going to come in at, so on and so forth. Here's the comps. So here's all the information. Here's why I priced it at this. And if you decide to go with me, here's how we're going to go about selling it. And this is what the process is going to look like. So if you can go 5 meetings, you get 4 of those, you're probably going to get 1 listing from those. And then, in terms of the deals that we list, I think we're closing about like 85% of our listing. Like, you can get a listing, especially as making sure that it's, reasonably priced, the seller's motivated, so on and so forth. There's a good chance you're going to transact on that deal.
Hold on. How long does it take to make 250 calls? Can you do that in a week's time?
I can do it in a week, yeah. You got to be specific about it. And sometimes you don't hit it. this week, like I wasn't in the office at all day yesterday. I was at an inspection, but sometimes we whip out the tablet in the car and try and just work from there. But if you set aside, 2 hours in the morning, 2 hours in the afternoon, you should hopefully be able to hit those numbers. And again, it is, you don't want to just blindly call people, hey, blah, blah, will you take an offer? Hey, will you take an offer? You want to be specific. So that's the other part of like, yes, it's cold calls, but that's some of the stuff that, not during regular business hours that you're trying to kind of curate that list of, okay, who am I calling and why and what am I saying? So that hopefully I'm not like, hey, Mark, you want to take an offer on your property? Hopefully it's, hey, here's a deal that just closed over here. Your property's down the street. Hey, here's what this person's charging in rent. So, that you're actually providing value so that person, and then again, from there, it's kind of getting a meeting with somebody and then finding out what their situation is with the specific property, or maybe there's another property that they have as well, and just going from there.
But I love what you said, because there is a formula to it, and it's simple, it's just not easy. Like if you're gonna make 250 calls, your chances of being successful or making it past year 3 goes up exponentially.
Yeah, definitely. And it's really just about being consistent too. Like some days I'll make, 50 calls 4 days in a row and I won't get a single meeting. And then you pick up the phone on Friday morning and you get 3 meetings right away. So you know what I mean? Like then all of a sudden that's an average on those numbers, because it kind of does come in waves where you're like, oh my gosh. And then all of a sudden you get 3 meetings, or you call one person. I had one guy one time who all of a sudden, I was like, very challenging to talk to this guy at the beginning of my career. Whenever you talk to him, he was right away just like, stop calling me. Don't talk to me. No, blah, blah, blah. But kind of always like, all right, I said this last time. Maybe I'll try this time. You know what I mean? To just try and strike a different chord with them or whatever it is. And I ended up, he actually toured the Farragut building that we talked about a while back. And that's how I met him. And then, he came and toured it. He didn't even make an offer on it. Or he did, but it wasn't good enough. But after that, a week by, he's like, all right, I'm going to give you 3 listings. And you're like, okay, cool. You know what I mean? So like,
play it cool.
Play it cool. Thank you so much. Yeah, but like, it's funny how when you like kind of look at like some of the deals that I've done, how they stem from one another too. So that's the other thing. Once you do start to get up and going, you do get momentum. You meet people at your first listing that come to see it, who all of a sudden you start talking to them about their real estate and whatnot. So once you can get momentum going, more deals lead to more deals is really how it works.
I was talking with a broker the other day. What you're saying there, that guy that answered, that might have been difficult. The optimism is he answered. In this day and age when no one answers their phone, and some people still do, but that guy almost like wanted it. He just almost wants to play like this game, and that you not giving up is huge. So I was talking with somebody on that. Like if someone answers, like that's such a green light. Don't take that, no matter what they say.
Yeah, and that's like the same thing with like somebody meeting with like, I'm not selling my building, but yeah, I'll meet with you. I can't tell you how many times this happened, and then you get there, and they're like, so what do you think this thing's worth? And you're like, okay, well, there you go. You know what I mean? So like people say that, and it is like,
it's a defense mechanism too.
For sure. And just, they're people too, catch me in a bad mood sometimes too. You know what I mean? Like when it sometimes very much just depends on the day they're having. And that's why you call back the person again. Strategically, if somebody says never call me again, I'm not calling them tomorrow and saying, hey, you know what I mean? Like I'm gonna
put in the CR system, hot lead, someone else call.
Yeah, like I'm gonna give that one some time, and I'm gonna say something hopefully different that, again, if you are saying something that you think adds value, then hopefully when they do kind of push back, you can say, hey, that's fine. I just wanted to let you know this information. If it's valuable, hopefully that'll resonate with you.
I love taking if I have the time, I'm just driving. Like I love just taking calls and like hearing people's pitch or how they're trying to hook me. Or like the other day I had someone call me and I'm like, listen, man, that wasn't bad, but I could totally tell you're reading it. So call me back tomorrow and try not reading it. The guy called me back tomorrow. I missed the call or whatever. But like, it's like people, I love like the curiosity around how people try hooking you.
Yeah. Well, the other thing is money just talks, right? Like I'm not selling my buildings. We had 2 of them just appraised because we were refinancing. I saw the numbers. I was like, ooh, like, it just, right. Like you're not like, I'm on the far end of the spectrum of like, hey, I'm holding this thing. I was like, ooh, like, so if someone says like, yeah, I'm not really selling, like you're a seller at some price,
Yeah.
right?
Well, I can't
Or
tell
at
you.
some circumstance.
Yeah, I can tell you how many times somebody's told me that, and then I'm like, all right, maybe I'll follow up with them in 6 months, and then 4 months they sold it. You know what I mean?
Yeah.
So it just depends.
Circumstances change fast. So I guess my question would be, how do you handle your follow-up? Like, do you have a CRM? Do you have a specific how often you touch people? Like, what type of information are you sending them?
Yeah, so we use it's a Salesforce product. It's Apto, properties, ownership, and who does all of that, or who owns what and all the contact information. So yeah, whenever I log a call with somebody, I will, I kind of like just however I'm feeling right there, recap the call. And then I kind of just like talk to my future self of, hey, this is what we talked about. If it's a cold call, like said this time, try that next time. Sometimes I schedule tasks that are like, some of the bigger owners too. I'll call them, but for the most part, I'm calling them when I have a new opportunity. So it'll be like a reminder to myself of any, 15 units in Edgewater, 10 to 50 units in Edgewater for this guy that you're working on or whatever it is, and just managing it that way. And you kind of, as you're going, you kind of track your pipeline of, all right, here's what's under contract, here's what's listed, here's proposals that I've done over the last year. You know what I mean? So sometimes I will just like look at that and be like, okay, just think for a second, have some critical thinking of what can I do? What have I done that I can share with this person that isn't, hey, what's up, man? You want to sell your property yet? Blah, blah, blah. Like trying to say something that's actually relevant for them, because they know why you're following up too. You know what I mean? Like I don't have to call and say, hey, do you want to sell your property yet? They know why I'm calling, but that same thing gets accomplished by trying to give a real piece of information.
Yep. All right. So I know listings are gold for you guys, but you help on the buy side.
Mhm.
You've worked with, and we have a ton of we have definitely more buyers listening than sellers. Like everyone listening to this is trying to grow their portfolio.
Yeah.
I know you've brought me some great at bats. Talk to us about how you can help, our listeners who are looking to buy a 6-unit, looking to buy a 5-unit, et cetera.
Yeah, definitely. I mean, I think some of the best things to do are talk to brokers and start to narrow in on what you're looking for. We talk to people all the time, and again, there's a lot of buyers out there. A lot of what I'm trying to do is find deals just to help people, because we've got buyers, but the hard part is actually finding the deal. But when I can tell that somebody is, eager about trying to find something, somebody's like, just send me everything you got. I have a lot. You know what I mean? I have current listings. I've got stabilized stuff. I've got value add stuff. I've got suburbs, city, 2 to 4 units, 30 units. So I can't send you everything. Some of it's off market too. Like that's a lot. And so I think for somebody starting out or just trying to get that is talk to brokers. They're going to have good information for you. Look at the deals, underwrite the deals, and then communicate with them as to what you're looking at. Okay, send me a good deal. All right, well, what's a good deal for you? So the more and more you learn about, from my perspective, that I can see somebody's like looking at this and giving the feedback, then I can continue to narrow in on what they're looking for. And I understand it's, they might not know that they need a 6-unit in Andersonville. Like it takes a while to get there, but just starting to underwrite those deals, look into them, go tour them, and find out what you do and don't like so that you can kind of narrow in, as opposed to keeping it broad. Because when that's the case, there's a wide range of deals. And so if you can narrow in on stuff, that's going to be helpful for that person too.
Yeah. The other thing too, selfishly for them, just get some of the reps, right? You don't,
100%.
the more deals you underwrite, the better you get at, like, you just see an OM and you're like, yeah, this is not, like right away, like 10 seconds, this is not me.
Yeah, for sure. And you start to, develop it a lot quicker so that you can answer those questions as to what you're looking for. There's people who, okay, no, I'm only buying below 150 a unit because they want to add value. There's people who don't want to add value and they want to have something nice that they don't have to worry about. So just getting those reps and understanding how the deals look is definitely going to be helpful too.
Yeah, like what's like the dumbest thing you've heard or the dumbest thing that a potential buyer can say to you where you go, God, this guy or gal is not serious?
Like you got any 10 caps on the north side or something? You know what I mean? Like that's a tough one. It's like, well, doesn't exist. You know what I mean? And so, but you explain that, I'm not cruel about it, but hey, this is what these are going to look like. And I'll kind of give you a range, like a mixed use building got a mixed use building at a 7.25 cap. That might be, if you're looking for current yield, as good as it's going to get in terms of up in some of the neighborhoods that you're looking. So, I don't fault people for saying that. Of course, if you want to find, like, everybody wants that, but if you're going to be realistic about what you're going to find, that's going to be pretty tough.
The cliche. Hey man, I'm looking for a good deal. You got anything?
Yeah.
Just send me anything you have off
Yes,
market.
anything you got off market.
Yeah, just send me everything. And it's like, okay, again, everything is a lot. So,
Yep. All right, let's talk about some neighborhoods. So you're very active. Do you want to go? You go Rogers Park, Irving Park. Where do you want to start? I'd pepper you some questions.
we could start in your hood over like Portage Park, Irving Park,
Let's do
Jefferson
it.
Park.
Yeah. So you've gotten some nice at bats here. What for our listeners who are somewhat familiar, just give us just the 30-second overview of, call it, that area. Like, what do you like about that area? Obviously, demand is very high.
Mhm.
What do you see things trading at? Just kind of give us a little lay of the land.
Yeah, so I've done a couple deals over there over the last, I guess, 1 year or so. But up in those neighborhoods, I mean, like Portage Park, Jefferson Park, it's not as much of like, it's still dense, but you kind of get to a little bit more of a suburban feel with some of the stuff out there. It's a little like quieter. And again, I've found some of the deals, like we did a deal at Central in Balmoral. It was a 5-unit apartment building, just like 60s yellow brick, that we did probably like 2 years ago out that way. And we sold it at $790. So it was like $150 a door. But at that time, most of their 2-bedroom apartments, vintage but clean. Like when I say vintage, like pretty old finishes kind of all throughout. But like people take care of them. They've been there for 30 years and they're in pretty good shape. But all the rents were $1,100 for a 2-bedroom. And so again, that guy bought it and he didn't touch anything and he got everybody to $1,550 without lifting a finger. You know what I mean? And it's funny, I'm working on another one out there now. It's the same building. And the guy, when I sold that one, he was like, I really want more towards like 850 and 875. And at the time I was like, that's pretty steep. I don't know if we can get there. But now I'm calling him. I'm like, we could try that. You know what I mean? Like, it's because of where the rents have gone. It's become much more possible. So going back to it again, I see both of the deals, that Farragut deal I sold, that one, and then another one I did off of Agatai. It was like Milwaukee and Montrose. Those were they sold at about $160,000 a unit for mostly 2 bedrooms. Some of those had a couple 1-bedrooms in them, but were updated. So that's where kind of those were trading. Both traded at like a little bit over a 10 times gross. But
And for our listeners, when you say 10 times gross, it's explain like, the gross income is $100,000, meaning it would sell at just over $1 million.
yeah, $1 million property, $100,000 gross income. That's 10 times gross. And that's a kind of a quick metric that people look at. It's not just like all the metrics, they're not perfect. You know what I mean? If the rents are super low, well, don't look at the current GRM. Like, look at what they can be and what it's going to take to get there as well.
But those are really great indicators for just kind of reducing what you're actually looking at. You could toss it out right away, or you could decide to look deeper.
Yeah, for sure. And then kind of partnering it with some of the other things. Okay, if you do something that's at 10 times gross, but, in some of those markets, it's at 2, this probably isn't the right example. The math probably doesn't work out. But if it's a super high price per unit, you're like, okay, maybe it's a little bit that number needs to come down a little bit because it's not a $300,000, per unit market if it's something that's vintage or whatever it looks like.
I'm trying to get stuff.
Yeah, you never know, man. Things be going the right direction.
So, all right, stable tenants up there as well.
Yeah.
What have you, like, when you take something out? I know, like Farragut, you had like 10 offers. Like, when you take something out on the north side here in those areas, like, are you typically off market getting everyone who walks through the door throws you something on paper?
Yeah, some people will, and again, it depends on where the pricing is at, but some people will. Yeah, we're getting good activity on the new stuff that we're bringing out. But on those, Farragut's a great example actually, because I had Farragut 2022. I sold these guys building for them off market down at like North and Rockwell, and then they gave me Farragut. And I was trying to sell Farragut at $995 was like the list price, and I couldn't get anybody to $900. So I had Farragut. I think it was just for like 60 days, and it was right before the holidays. It was colder, but I couldn't get anybody above 900. I needed to get somebody up to like a low mid 9 number, and they wouldn't do it. So 2 years go by, and I had shopped Farragut off market for 2 years, couldn't find anybody. And then put it under contract. That kind of fell apart, and then listed it at 950, and it was gangbusters. Like
Yeah.
it really speaks to like how a neighborhood can kind of go, and obviously that one ended up selling above list price.
Well, yeah, when you have 8 units or whatever, and they're all $100, $200 more,
Mm-hmm.
you have an extra $1,600 a month in rent. Like,
Yeah.
all of a sudden the numbers start looking a lot.
Yeah, for sure.
It catches up, right? Like, not that I don't think rents will go like this forever, but like it catches up.
Yeah, it was literally the same story at the Milwaukee. It was 5121 Agatite that I sold. That one was just off market. I never got a listing for it, but I dropped that deal off market for 3 years. You know what I mean? And then all of a sudden you call somebody who owns a 6 unit, bought it a year before, and he loves it. And you're like, all right, there you go. You know what I mean? And that guy's done really well with that. And the rents have continued to grow. He's had it for 1 year. That was a little bit more stabilized. The guy had rehabbed it, but it speaks to how things can kind of change, and it can kind of catch up with it as well.
Yep. All right, let's go up to either Rogers Park or Evanston, and then compare. I guess give us the 30-second rundown there, and then let's compare it to the neighborhoods we just spoke about.
Yeah, so starting like Rogers Park. I mean, Rogers Park has its different pockets. You get up to far north and, along the lake, kind of East Rogers Park. They're like smaller units, like the one I just explained. And then I just closed a 23 unit off of Sheridan Road last week. That was the same thing. It was like 90 a door, studios and 1 bedrooms for the most part. So up there is kind of its own little pocket. West Rogers Park starts to feel a little bit more suburban, kind of a little bit more comparable to like a Jefferson Park on some of those, kind of Skokie feel. And then obviously down more towards Loyola, kind of its own little environment too. So, people time like, sometimes people will be up in that pocket. A lot of people, if you're going to be like down in the Edgewater, they'll look at the stuff around Loyola, but they tend to want to be a little bit further south than there. But different renters, especially when you get closer to Loyola. We just sold a couple 3 units over there for like 1.1 each that were all students. But again, it's all a product of the rent. Those were 4 bedrooms getting $2,850. Studios and 1 bedrooms were at $900 up in, off of Sheridan Road.
Mhm.
It's definitely got some different pockets to it for sure.
Yep. And then compare that now to Evanston.
Evanston, kind of like the same thing. So like you get into the far north side of Rogers Park, and kind of South Evanston has its own, those can be a little bit similar as you especially go west. But then getting up around the university, and I see it a lot there. Like we're doing a lot of those like student housing, 2, 3, 4 flats. I think we've got 5 listed or under contract up there right now. Kind of different, and it's a lot more so on like price per bed. It's 2, 3, 4 units, but sometimes there's 1 lease for the whole house because it's just a group of college kids that all they care about is living together.
Mhm.
And so it's kind of an interesting little way to look at it. But we have a guy who's bought some stuff up there, and he like rehabs them to the nines. Like he guts it, provides all furniture for all the tenants. And so it's like top of the line. He does like fireplaces in the backyard, really nice stuff. And a couple years ago, he was getting like $1,400 per bedroom. Now he's getting like $1,550 per bedroom. And
That's per bedroom, so it's a big deal. Like $100 on a bedroom versus a unit is a big deal.
yeah, for sure. And it all depends on the location. There's streets that are better than others in terms of where the students want to be. Excuse me. But that's like the high end. I'm also selling one right now that's rented at like $950 a bedroom. So when I'm talking to people, I'm like, hey, this is what this one looks like, and it's a $950 a bedroom. If you want to rehab it completely, the high end might be towards $1,500 a bedroom. Or if you want to do a light thing, maybe you end up at $1,200, $1,300. So it's kind of that one's a totally different. I don't see it as much with the stuff around Loyola, at least on the stuff that I've sold on as much of the price per bedroom. It still seems like it's kind of a unit thing. Again, it's probably 3 college kids still splitting it up the same way. But Evanston was a little bit different in that respect.
Yep. I'm a little unfamiliar with Evanston, and this might be a little outside your wheelhouse, but dealing with the village there, right? Is there a point of sale inspection? Just things you've heard from the owners up there, from someone going from the city to Evanston. What are some things they need to be aware of?
Or buyers deterred by what you're mentioning?
Yeah, so there isn't a village inspection like there is in like Skokie, for instance, that you have to do at the point of sale. I think every year you have to do your rental registration where they are supposed to come out and I think inspect the unit and see that. So you have to.
They do have that, yeah.
Yeah. So you do have to do that. Other than that, I mean, Evanston. Some people love Evanston. Some people hate it. They want to. The people, especially if people live in Evanston, like we just sold a 2-unit mixed use up there. That was right on Central Street. It was a vacant. The commercial space was vacant. Everybody that came looked. That was a local Evanston person that had a business idea that they wanted to put into that space. So people that are in Evanston love Evanston. Sometimes people they don't want to deal with it. There's a few different things going on there. But we're selling another like 6-unit center entryway up there right now for like $950. That guy, he's not going to have to do much. I mean, it's going to be a really good building for him.
So we do non-refundable movie fees and all that up there because they mimic pretty much the Chicago laws when it comes to that for security deposit. So there's a whole different level of the management side over there.
Yeah.
Yep. All right. We've mentioned a few neighborhoods. What is the neighborhood in your head that we're going to look back 10 years from now and say we missed? Man, should have tripled down there. Should have put some money there.
You know where I'm kind of like, I just did a deal recently, and I'll kind of give you the metrics for it. It's kind of like it's almost like a West Ridge. Or that's not kind of, that is what it is. But it's like Rogers Park, Edgewater's right here, but that's basically right where the new Peterson and Ridge metro station.
Yep.
So I just did a deal recently there it was 6 units, all 2-bed, 2 baths, very vintage, kind of worn out stuff that's sold for $860, and it was grossing $80,000 a year. They were all like $1,100, but like it was already 2 bathrooms. That guy went in. I think he put a new roof on it, and then I think he redid 2 of the units, turned them into 3-bed, 2 baths. Got like $2,400 for him, and got the rest of them up to $1,700 without doing anything. I mean, within 6 months, like I took it from $80,000 to like $130,000. And so, again, he put some money into it, but if the roof was good, like he would have basically, for 2 rehabs and just obviously kind of some turnover with the tenants as is, that's a pretty significant jump that he was able to get. So, I don't know. That's one where, especially if you go half mile east, half mile south, something can be totally vintage, cost you $200,000 a unit. That's one where I've kind of looked at, and you start to see some of those deals, and, you're like, all right, I think there really could be something here too. And then I'm high up on your neck of the woods too.
Yeah, going back to Westridge, it's funny you say that because like Rogers Park feels so dense to me. And I literally just walked one in Westridge last week, and it was like 1,400 square feet a unit.
Yeah.
Like the deal didn't pencil, but I was like, God damn, like you can do a lot here. Like these are big units.
Yeah, big units. And again, there's some, like, it's a lot of like quiet residential streets. And again, the new metro station right there. And I think there's a few proposed developments. One's still in the works off of Peterson, but like, and it's just so close, like, yeah, they got 2,300, 2,400 for that 3-bed, 2 bath. You go to the other side of Ravenswood, that same 3-bed, 2 bath is definitely pushing $3,000, like probably even maybe $3,500, So that's one that, I'm kind of looking at trying to find some stuff over there too.
Yep. All right. Then why are you bullish about my neck of the woods? Let's hear it. I just want to hear you say it.
I just, there's so much like
all the offers I have out there. Let's help me justify in my head that I'm not insane.
I just think there's a lot of, like, especially there's really good renters over there. I think the opportunities out there, it's a lot of, everywhere people have owned them forever, but there's a lot of opportunity where if you do go in and rehab top of the line, it can be worth it in some of those, and up in that neck of the woods. Like I think people will look for some of the higher end stuff over there. But there's also a middle ground too, where you don't have to go in and totally rehab something. So especially to the tune of where, they've got 2 bedrooms at $1,200, that's a serious opportunity. You can get those more towards $1,700 right now without touching anything. And if you do want to touch something, you're going to be north of 2. Like, I just think there's a real good opportunity over there. And I think, that's where people want to be, whether it's renters, investors. So I just see a lot of positive momentum out that way.
I think you're in neck of the woods and all across really the north side, the gap that we've seen is, it used to be, just say 10 years ago, vintage or updated. The gap might have been $150. And now it's like $300-$400. So that gap has increased. And I think it's just the demand of people wanting something nicer, or vintage is getting older. And that's definitely drawing more rents.
Yeah. Well, we've also like new construction is now hit as well. Like you've seen your first 2-bed go above $3,000 a month. Now
Yes, we
that's
manage
brand
that
new.
Northwest Highway
Yeah,
in Jefferson Park.
that is my comp for everything I'm doing right now, right?
Yeah.
Because we have a couple smaller things. Like it's really we need to build more so like these numbers come down, like as a society.
Man,
But,
we
like,
said
that's-
we said something on here a few weeks ago. What's this? Everything built today will be affordable 10 years from now, 15 years ago. It'll kind of fall in the realm of where rent should be. So like that hit home with me big time.
yeah, we haven't done that, which is why we're in this situation, and we continue to defer the problem. So we're going to continue to be in this situation because there's no immediate gratification
Yeah.
for doing it, which sucks.
Yeah.
So
Well, and I think too, especially for some of the nicer stuff. I mean, that probably is somebody who was maybe would buy a home, but it's a little bit unaffordable right now. So they are like, all right, well, I'm just going to rent a nice place. Especially if I don't know. I think people are moving around a little bit more now. You can rent something for nice for a year. All right, I'll do that as opposed to trying to buy something.
well, the metro in from the Jeff Park station is 16 minutes. So you can live in North Center, take the Brown line, that's 30.
Yeah.
Do you know what I'm saying? Like we're actually, even though we're further away, because you have the blue line and you have that metro that zooms in on one stop, like
Yeah.
you're actually a lot closer than you can get downtown a lot quicker than a lot of the other neighborhoods, even though you're geographically further.
Yeah, for sure. And again, you're right next to the highway. I think. Yeah, my buddy, he lives in his grandma's house, passed down from his dad to now him. He lives over
Now you're
off
just
of-
stereotyping.
But like he loves it. He takes the train and it's very easy for him. Like it's very manageable for him too.
Yep. All right. Outlook on Chicago as a whole.
Oh, I'm very pro Chicago. I love it here. I think again, it's always been pretty slow and steady in terms of rent growth. You know, a couple years ago when everything else was booming in other cities, states, so on and so forth. Chicago was kind of just mildly growing, but now it's got its shine. And so again, I'm very high on Chicago. I don't plan on leaving. It's you know, it's a very you know, even getting past some of just like the real estate metrics. I think it's the greatest city out here. Like, you know, I live down a river north, but being able to go to the lake, especially when it gets warm, like the energy you get from being outside on, you know, some of the first nice days of the year is very, you know, energizing. It's very motivating, a lot of that. So I'm very high on Chicago in terms of real estate, on just a place to live, a place to be. I think it's great.
Awesome. Ready to wrap?
Ready to wrap?
Let's do it.
All right. What's your competitive advantage? How have you been able to do this while other brokers wish they could?
I think one thing I really pride myself on is just the overall work ethic. And one thing too that I think is necessary for just a brokerage is like, and I think I've kind of owned, is just the ability to fail, which kind of like, man, this kind of sucks. But like you are going to fail in many different ways in brokerage, whether it's somebody hanging up on you, whether it's pitching on a deal that you lose out on, whether it's not selling a listing, but being able to take that and roll with it. And that's one thing I think I've, you know, been forced to kind of develop a callous brain to it because of what happens. But a deal falls apart. Okay, well, that deal's done. So now I need to find somebody else, so on and so forth. So being able to learn from stuff, turn that into, okay, how can I, you know, learn from this to win more business, so on and so forth. I think it's a necessity to it. And one thing I think I've gotten pretty good at.
Oh, good answer. All right. One piece of advice you would tell someone that is yet to buy their first property here in Chicago.
Start talking to brokers, kind of on what we said before of brokers, other people too. You know, there's a lot of people in this industry who want to help other people and share information. You guys are a perfect example of that. And so start talking to people. If you're looking at specific deals, kind of like I said earlier, start underwriting stuff, figure out what you do and do not like and communicate that. Go look at stuff because, you know, there's also never going to be probably the perfect deal. You know, if it's the perfect deal, it's, you know, probably going to get bid up to the point that it's not a perfect deal. You know what I mean? So start talking to people and really put yourself out there on underwriting, having those conversations, and just, again, really putting yourself out there.
What do you do for fun?
Fun, love to golf. Tend to try and play on the weekends.
What are we shooting nowadays?
Dude, I've gotten
The
worse.
honest answer.
I've gotten worse. A couple summers ago, I was like pretty steady in the 80s, and I've played 3 times this year, and I've shot 199. So we're working on that, but we're gonna keep trying for it. Aside from that, you know, hanging out with friends, beach volleyball is one of my favorite things. So we just started up our league last night. But other than that, just kind of enjoying the city, man.
Awesome. All right. Good book, podcast, or self-development activity you recommend to our listeners?
This podcast is a fantastic, and the resources you guys provide, not to be cliche with it, but I think you guys do a really nice job of, trying to spread that. So kudos to you guys on that. When for my job specifically too, there's a lot of no's, there's a lot of problems. And so I always prioritize like a workout in the morning. It's kind of my way of getting a win when you might go to the office and there might be a lot of no's and hard things to go. So trying to carry that momentum towards it. So again, it's really how I try and, get a win, carry that momentum through the day, because you gotta, with kind of the stuff you go throughout brokerage, you gotta kind of protect the mental too, because it can be challenging at times.
Other than yourself, name a valuable resource for other Chicago real estate investors.
There's a lot of good groups. I think kind of going into some of the neighborhood groups. Obviously, the MBOA is one of the larger ones, but I do a lot of the like Rogers Park Builders Group, getting involved in some of those. I know the Northwest side as well. I think that's a fantastic resource. You go there are other like-minded people who want to meet people. They want to help people. I think that's some of the best ways to go get involved and really just start having the conversations that you need to have to build out your team, build out your book of business, whatever it may be. I think those are really positive. And sometimes it can be hard, go out there and network and introduce yourself, but just know that everybody there wants to meet other people too. So sometimes you just got to say hello and it goes from there.
Yep. All right, John, thank you so much. You provide a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Yeah, reaching out to me. Again, you should be able to find my email is jpreston@HT Apartments, or my phone number's online as well. Reaching out to me and just having the conversations of who you are, what you're looking for. Again, you never know what I'm going to be working on, where something might align. So just introducing yourself and having those conversations is the best place to start.
All right, we'll link to all that in the show notes. We end with our Chicago fact. Mark, who are we playing for? Who's sponsoring?
All right, today's sponsor is Tom Rowley. If you have an eviction or you have a tenant that's not paying or you have some sort of tenant dispute, Halstead Law Group is awesome. If you need me, reach out. If you need, reach out and I'll connect you with Tom and his team. But we're playing for John. So John, if myself or John gets this question right, you will get a $50 gift card brought to you by today's sponsor.
All right, so this is a pure guess one. I'm sorry. I was doing some Irving Park research. There's a home there. It's called the Phoebe and John Gray House. It was built in 1856. So it's a farmhouse from before like Irving became like a planned neighborhood. It's the oldest neighborhood in the park. It has a designated landmark. It's this cool Italian Victorian mansion that sticks out like a sore thumb. I actually know the building. My question for you is, what is the address of that building? And here are your options.
Oh my gosh, it's horrible.
You got this one?
4362 West Grace, 3852 West Belle Plaine, 3939 North Lowell, 3652 North Trip. I would not have known the address, but when I Googled the image, I was like, oh yeah, I've seen this bad
What was
boy.
the second one?
3852 Belle Plaine. So 4300 block of Grace, 3800 block of Belle Plaine, 3900 block of Lowell, 3600 block of Trip.
I'll take Grace. You got to take something different, so we got 50-50 chance.
I was thinking Belle Plaine. That felt right to me.
You guys were good with the east-west streets there. It's Grace.
Yes.
Hey, there you go.
All right.
Nicely
All
done.
right.
Look it up online though. It's an awesome looking building. It actually transacted a few years ago.
What is
Really?
it? 40? What is it?
4362 West Grace. It's got what's that called? A cupola, like a tower.
Yeah.
It's got one of those. It's got like arch windows. It looks awesome.
Yeah, I'll have to check that out. All right. Well, man, John, thank you for helping that. And John, John was playing for John. So John Likens, you get a $50 gift card brought to you by today's sponsored Halstead Law Group, Tom Rowley. So John, thank you for coming on. Tom, thank you. Listeners, we talked about today on the episode, getting out to these real estate events. And we have all the information for events and groups like the Rogers Park Builders Club, all the MBOA neighborhood, and then we have all of the other groups that are out there that we know of. And if you know any of any, you could add them on there as well too. But go to straightupchicagoinvestor.com. Right on the homepage, it says networking events. Check it out, and we add any new events on there as well too throughout the summer. So check that out. Get out, network, because that's the only way you're going to grow your net worth. John, thank you. Tom, thank you. Listeners, we'll see you next week.
Thanks all.